Navan is the next enterprise SaaS startup to go public. Can the IPO momentum continue? The BitGo and Fermi America IPOs are also on the horizon. What do these startups tell us about the current state of crypto and AI? In IPO Radar news, an electric aircraft IPO, and Tether's valuation has become untethered. Welcome to the Axis IPOs podcast, where we explore opportunities to invest in the world's most innovative and disruptive pre-IPO companies. I'm Craig Stevens, founder of Axis IPOs. Today I want to highlight 3 upcoming IPOs. The first one has been on my radar for a few years now. The other 2 have kind of snuck up on us, but I think they're going to make a big splash in the markets in the coming weeks. Those are BitGo and Fermi America, and people in our community are talking about these 2 and what they mean for crypto and AI. Let's start with Navan. Navan is a travel and expense management software company for small businesses and corporate enterprises. Navan empowers employees to reserve, manage, and view their travel expenses on an intuitive, modern, and mobile platform. The Palo Alto-based startup was founded in May 2015 as TripActions by Ariel Cohen and Elon Twig, who previously co-founded and sold StreamOnce. So the company emerged from stealth in 2017 and rebranded to Navan in early 2023. TripActions and Navan, neither really names that stick with you. The company has derived its name from the words navigate and avant, implying the art of navigating the world with ease and grace. Navan competes with SAP Concur, which is the legacy platform that maybe a lot of you have used in your own corporate lives. I've used that, and it's not a very modern platform, that's for sure. Oracle plays in this space, and in the startup world, there's Expensify and Brex and Ramp and TravelPerks. So this is a very competitive space that Navan is playing in, but revenue is growing, and this is a business that's working. It's not profitable yet, but it looks like it's a pretty good time for this company to be going public. Navan filed confidentially for its IPO on June 20th. At least that's when it was reported on. And then on September 20th, the S-1 filing was released to the public, and we're expecting this one to go public sometime in mid-October, I'd say. Don't have a specific date yet. Renaissance Capital estimates this is going to be an $800 million raise. That's their estimate. Caplight places the valuation somewhere around $9 billion. That dates back to 2022, so we're not really sure what the valuation of this company is going to be headed into this IPO until we see the terms drop, which could be in the next week or 2 or possibly 3 weeks from now. Let's take a look at this S-1 filing. I'm sharing my screen now. I'm on the SEC website looking at the Navan S-1 filing. This became public on September 20th, and we're going to take a look through this. I'm not going to do a deep dive on this S-1. I just like to highlight a few things to tell the story about this company. Investors who are thinking about investing in any IPO need to look through these S-1s and read it a little more carefully than I have time to do on this podcast. I'm not here to make a recommendation to buy or sell any of these deals. I'm an advocate for companies to go public. I think there are too many companies that are still private, and those companies would benefit from going public, and the public would benefit from having more investable companies in their 401ks, in their index funds, and certainly these companies are available for individual ownership and speculation. So we're still waiting on the terms to drop. We should get those in October, but what we know right now is that Navan will trade on the NASDAQ. The symbol is NAVN, pretty easy to remember, and Goldman Sachs is leading this deal along with Citigroup. Now, we've seen a lot of deals so far in 2025 with Goldman Sachs, JP Morgan, and Morgan Stanley. Morgan Stanley is solidly on the second line in this deal. We're seeing more access for retail investors across the board. So I do think we'll see some access to this deal across the various brokers, and we'll learn that when the terms drop in a few weeks. So most of these filings, at least these high-profile filings, have this one-pager or a two-pager to tell the story of the current state of this company as it's about to go public. And I'm sharing the Navan one-pager right now. It says here, it's the all-in-one travel payments and expense management platform. Current revenue over the last 12 months, $613 million. That's 32% year-over-year growth. If you remember, a few weeks ago, we saw Netscope. Their year-over-year growth was 33%. It was also a SaaS company, but in the cybersecurity market. Here we have a company growing at 32% year-over-year with more than 10,000 active customers, highlighting a total addressable market of $185 billion. I mentioned this is a competitive space, but it's a big market. There's a lot of companies that need this type of software and to integrate it into their HR software programs. When COVID came along, things slowed down, but corporate travel is back. I think people are tired of the Zoom meetings. In person is the way to run businesses, always has been. And so companies are spending money to simplify this process to get away from the legacy providers like Oracle and SAP, and to provide a better user experience that's mobile first, that handles receipts, and a system that pulls intelligence out of all the data collected across travel expenses in the company. I like these letters from the founder because it does give you a little bit of background on these companies. It's almost like an autobiography of the company, how it started. And this one, written by Ariel Cohen and Elon Twigg, the two co-founders, talks about a my business travel is broken moment that one of them had in 2013. He landed in Ukraine on a freezing cold night, and his hotel reservation had gone missing, and they couldn't fix the problem. He blamed the software that he was using at the time, I guess, where food delivery and ride shares were booming back in 2013. This travel and expense need in corporate America was still stuck in the 1990s or early 2000s. So like many of these startups, out of frustration, a company was born. Like a lot of these S1s, we're seeing a story being told. Travel is more than just getting from point A to point B. It's the lifeblood of connection in the modern business world. I think some companies believe that. I think a lot of companies are not believing that these days, and they're okay with remote work. It really depends on the size, but these big companies, big global companies that have a lot of travel needs for their employees, they need a system that's easy to use and isn't frustrating like the legacy systems. So Navan is on the cloud. It's using AI. Of course, these guys all drop AI into their filings, and they're calling this a new paradigm in AI-powered travel management. I'm not sure I buy that AI is really going to be managing this software or helping travelers travel better. This is travel and expense. You upload a receipt or maybe connect to a corporate credit card to integrate everything into a mobile phone. I don't see how AI really works here, but you got to work that into the messaging or else no one's going to be interested in your business anymore. So we still have a lot of blanks in this filing. Class A shares, the common shares, this all will be filled in a few weeks. One of the primary use of proceeds for this deal is to pay off debt. This company borrowed money fairly substantially in the last few years. I'm sharing my screen. I'm looking at the Caplight funding rounds, and there's two fairly significant debt issuances. In 2020, it borrowed $500 million, and again in 2022, late 2022, it borrowed $400 million, and it looks like Goldman Sachs was part of those deals on the lending side. Goldman Sachs is leading this deal. So it goes to show that these IPO relationships, these underwriter relationships, date back to early days. Goldman Sachs has been with this company for some time, lending money, possibly offering other banking services. The main proceeds of this deal are to pay off debt. It's also going to use this for general purposes and working capital, but there is a substantial amount of debt on the balance sheet, and an IPO is an opportunity to reduce that debt as the company transitions from losing money to profitability and into long-term growth. I'm looking at the consolidated balance sheet data, July 31st, 2025. Of course, these S1 filings spell out the debt. You can dig into that as much as you like. It says here long-term debt, about $650 million. Total cash and cash equivalents around $223 million. So not an exorbitant amount of debt for the size of this company, but I really like this use as a use of proceeds for going public when you're raising capital, especially if the existing debt is not the best terms. Looking at revenue, it mentioned that 32% year over year for the last 12 months. The year ended 2025, that's fiscal year, and January 31st, 2025. Revenue was $536 million, and in the first 6 months, ended July 31st, we're already at $329 million in revenue, and side by side, you can really get a sense of where this company is going. It had $402 million in revenue in 2024, $536 million in 2025, and there's still a net loss per share down to $4 a share. When these companies go public, it is time for them to start turning things around because you're going to have Wall Street investors questioning your numbers every quarter, and there's only so long that the public will accept a losing money company when it's public. Amazon, we know, did it for years and years, but Amazon was growing at a ridiculous rate and really investing back in the company. This company is an expense and travel management SaaS, and I'm not sure how much it's doing beyond that. So decent revenue growth, but still losing money. Would like to see that flip when it becomes public, but I'm an IPO investor, so I'm not really concerned about what's happening in the future. I'm really concerned about what's happening right now going into this IPO. Long-term public stock investors are going to pay closer attention to this. I'm more in this for the IPO. This is not the kind of company that I would want want to own for the long term. I'm more of an index fund investor for most of my retirement accounts. I do speculate with IPOs. That's my thing. That's how I speculate with a small amount of my wealth. IPO investors who want to own these for the long term, going to have to dig a little deeper into this S-1 filing that I have just here. I think in a competitive landscape, it's something to think about. There's market share to take, but how does this compare to the other modern platforms that are out there? And what are the growth engines beyond travel and expense management? This is not the first time that Navan was interested in pursuing an IPO. It actually filed for an IPO confidentially back in September of 2022 when it was still known as Trip Actions. So it goes to show that sometimes these IPOs can take a long time to develop. Of course, it went through the 2022 trough in 2023. Things weren't very strong in the IPO markets. Now that things have recovered, this company has gotten their act together and is pushing forward with an IPO. So it's good to see these companies that have been thinking about it for a long time actually pull through and launch. These next two companies, it's a different story that we'll be talking about here. BitGo is the first one I want to talk about. It is a digital wallet for institutions to help them protect their digital money from hackers and theft. It's a secure vault, you could say, for digital assets. But instead of catering to retail investors, this is more of an institutional play. So think hedge funds and private equity and maybe some corporations, endowments, so larger investment organizations. BitGo is not a household name whatsoever. And that's why it never really landed on my IPO radar. I try to find companies that people know about and people are interested in investing in. This company is more likely known by the crypto community, the people who are really enthusiastic about this stuff, especially those in the venture capital community and private equity who are paying attention to this big market piece that you could say is this crypto for institutions. And this is a major trend in crypto right now. As the regulations have eased up and widespread acceptance from global financial institutions for crypto assets and digital currencies is getting stronger, a company like BitGo is very well positioned. Now, we saw Bullish recently IPO, and that was another institutional level crypto company. But I think it was more of a crypto exchange type of product, whereas this is more online wallet. I'm not going to dig too deep into this S-1 filing, but this is a company that's going to list on the New York Stock Exchange. It's going to use the symbol BTGO, pretty easy to remember. And this is another Goldman Sachs Citigroup deal. Instead of Morgan Stanley, we see Wells Fargo in here and Deutsche Bank. And as I'm looking through this filing, I do see a little name here in the corner of my screen. It's SoFi. So SoFi looks like it's going to get a very small font in this list of underwriters, but it looks like SoFi is going to get access to this deal. Presumably, they're on the S-1 filing. And there it is again on the underwriters page. SoFi is listed as the very last one. As a lot of us know, these online brokers that can offer IPO access to retail investors, they're not always listed in the S-1 filing, but when we do see one like this SoFi and this BitGo filing, it's a pretty good sign that SoFi is going to get access to this IPO. There's a whole list of brokers that offer IPO access on my website, accessipos.com. Go to the top menu. There's a shortcut for brokers, and it lists out about 8 brokers that get access to these IPO deals, SoFi being just one of them. So just some key highlights for this company. Last 12 months, total revenue, $6.1 billion. That's a lot of money. Assets on the platform, $90 billion. Number of clients, 4,600. Digital assets supported, 1,400 or more. Who knew there were that many? And there's a founder story. Just one last thing I want to look at in this filing. This is revenue growth. There's been tremendous revenue growth for this company. For the 6 months ended June 30th, 2024, $1.1 billion in revenue. For 2025, the 6 months ended June 30th, $4.1 billion. So almost a 4x revenue growth in the first 6 months of 2024 versus 2025. Total revenue for 2024, the year ended December 31st, 2024, $3 billion. And just 6 months into 2025, $4.1 billion. So this company is experiencing tremendous growth. It's in the crypto space. And we've seen really just 3 crypto IPOs so far. Circle, which was a massive blowout. Bullish, which was a pretty successful IPO as well. And then the Gemini IPO, which was disappointing to say the least. Gemini is just a company that isn't growing. It's in the crypto space, so people are excited about it, but it's not growing. BitGo is here to say, hey, we're growing fast. We have these very wealthy institutions that are our clients, and we should be a public company so that the public can participate in this growth, and they're going to be raising some money as well. So this could be a rather large deal. Now, this wasn't on my radar. I'd seen the name, and I can't write about every single IPO that's in the pipeline. There are just too many when these waves hit. So I like to pick the ones that people know about and are actively looking for investment opportunities in these private companies that will eventually go public. BitGo is not one of those. BitGo is institutional, and so it's not a household name. That said, now we're expecting this one to go public. So it's released its initial filing. I anticipate this one is going to drop its updated terms and IPO. My guess is around the second week of October, maybe around October 6th or so, we might see some updated terms, and then that kicks off the IPO Roadshow. And so by the third week in October, that week of October 13th is where we should maybe see this one land. And that could be when we see the Navan one as well. We're just not sure about that one yet. So another very exciting company in the crypto space. I'm picking it up late here. I have not been following this one. But when you see a company in that crypto space and the public markets are just begging to invest in high quality crypto companies, and then you also have this trend of large financial institutions that are finally adopting these cryptocurrencies and this whole idea of blockchain and decentralized currencies. As that trend continues, BitGo looks to be one of these leaders in the space. That takes me to the third upcoming IPO that is on my watch right now. And again, this is a late one to my watch. In fact, this one just hit the SEC website a few weeks ago. We got updated terms this week. And that company is Fermi America, Fermi Inc. So this one, not a common name for most retail investors, but this opportunity started to come up in the various brokers. I've seen it in Fidelity, I've seen it in Robinhood. And so if you're a Robinhood investor and you see, oh, got this Fermi IPO, what's that all about? I'm going to go check it out. So when you go researching this company, Fermi, and you go to the SEC website and type in Fermi, the symbol is going to be FRMI. But when you start looking at this company, you start to pick up some things really fast. It's in this power generation space for the AI future. It's essentially saying, hey, AI needs a ton of power to electrify the compute of these GPU chips from NVIDIA and other companies. Why don't we build a massive power campus in Texas so that AI companies can come to Texas and use our electricity to power their models? So on first thought, like, wow, this is a company that's really ready to invest heavily for the AI future. I was listening to a podcast not too long ago, the Sean Ryan podcast with a guy named Scott Nolan, who is CEO of General Matter, which is a uranium startup in the US that I wrote about recently on my website. And one thing I learned in that podcast was that by 2030, AI compute is going to absorb 100% of today's current electricity grid power. In other words, all the electricity that the US is using today, AI will use that much in 2030, just 5 years from now. And so not only does America need to generate more power for AI, but just for our own usage to avoid blackouts. And the only way to do that is to invest heavily in power generation. The cleanest and safest way to do that is through nuclear. And nuclear is a whole other story. And there's a whole lineup of startups that are pursuing nuclear energy. This Fermi is looking to build redundant energy in Texas using solar, natural gas, and nuclear in this big campus outside of Texas Tech University. But there's a few whoppers with this one. The first is this company is brand new. It was founded in January of 2025. It has no revenue. Fermi America has no revenue, and it doesn't expect to generate revenue in the next 12 months, according to the filing. It was founded by a group of investors and leaders, including former governor of Texas, Rick Perry. So this is a guy who worked for the Department of Energy. He was head of the Department of Energy. He was a governor of Texas. Well-connected guy, certainly with the regulators and with the local governments. They've secured the land. Reading through this S-1 filing, I was actually rather impressed by what this company is trying to do. There are plans, there are site plans, 5,236 acres, the largest site of its kind in the world. It's near a Department of Energy plant. It's got a water plan, and it's got this redundancy plan and distribution plan where it can create this power and send it to different parts of the United States. It can also keep it behind the grid, and if any AI companies want to build data centers nearby, they can. And they can get the power directly from this company and this campus of redundant energy. It's also near natural gas fields, one of the largest natural gas deposits in the country. And so it's going to start by generating energy from natural gas. It's going to have solar energy built into the plant. And it's going to eventually build out some nuclear plants designed to accommodate up to 6 gigawatts of nuclear power using Westinghouse reactors and some small modular nuclear reactors. So massive, massive investment. But today it has zero revenue, and this deal is looking to be a $13 billion IPO for a company with zero revenue. Now, I'm all for this investment push into nuclear and more energy to electrify the AI needs of the future and just the current usage needs. And we know that Texas has had some issues with energy. And other parts of the country, we're going to see prices going up because of AI and data centers, and hopefully no scarcity. Prices are going to go up first, but these massive investments need to take place. The question I have is, do I want to invest in this at this early stage? This is more of a venture capital type of investment where you're getting these massive dollars from various private entities, but it's actually doing this as a public company. It wants to do it as a public company and raise money from the public to invite them to invest in this deal. But the issue I have with this is it's just very early for this company. Management has not proved themselves to be operators yet. This is a brand new company. It's 9 months old, 10 months old. And while they have the big dollars and they have some big names and connections, and they probably have some very experienced operators working on this as well, there's no doubt that these people are serious people. They couldn't have this kind of IPO if they weren't. I just consider this highly speculative, and it's not something that I'm personally interested in. Now, I've got some friends and some members in our community, on the Patreon community, who are excited about this one from the standpoint of an IPO that people want to invest in these data centers and this power generation. And this is something very exciting to invest in. And yeah, there could be a pop. There could be a surge in this company's valuation on the early side of things. But for a company with no revenue and really hasn't even broke ground on most of this work yet, it's very early for me. I'd much rather see this company grow as a private company, and people who have private dollars that they're willing to invest in this risky type of bet can invest in that deal. As a public company, for me, it's a bit too much risk, too speculative. That said, I really like what they're doing. This needs to happen. These kinds of investments need to happen. There's going to be some government help, likely. There's going to be private dollars helping, and now there's going to be public and retail investors helping as well. Another interesting thing about this company is it's a REIT, a real estate investment trust. So they filed a S-11 filing. Actually, it's not an S-1 filing, it's an S-11, which is for REITs. And it's a pretty interesting read if you go through. I mean, they've thought this through, but they're losing money. I think they lost $6 million or so, and that's just probably going to salaries and people who could put together these plans, and lots of legal fees, I'm sure. So it's a very thoughtful S-1. It's a very thoughtful plan. It's a massive opportunity. The big question for retail is do you want to put your money into this type of deal? Yeah, we can weigh demand to see if we think there might be a spike in the IPO. But long term, this company has a ton to prove. It's going to take a lot more capital than what they're raising in this IPO and what they have already. So this is going to be investing money over a very, very long period of time. Building out nuclear capacity takes years, if not decades, cost overruns. So highly risky deal, highly speculative, and it's going to land on your lap in your Robinhood account or your Fidelity account, and maybe more. Those are the two where I've seen it. So do you want to invest in this? I'm not here to recommend you buy and sell. I'm going to not invest in this one. I'm going to stay away just because way too much speculation here. I want to see companies IPOing who are ready to IPO or truly ready to IPO, who are growing fast, maybe who are profitable and are ready to face the scrutiny of Wall Street analysts. Even though this Fermi IPO is exciting and it's in this data center space that's exploding and AI that's exploding, and you got companies like OpenAI and Anthropic and NVIDIA and xAI doing these extraordinary things and getting massive influx of funds from the hyperscalers like Microsoft and Amazon and Facebook, Meta. So massive amount of dollars going to this industry. And here's a company that's trying to fix a pretty serious problem. A little bit too early for me on this one. If you decide to invest, read through this S1. It's a pretty fascinating story. I'd really like to see the stock settle in before I would even consider a long-term investment in this company. But I do like what they're doing. I do think that this is a trend we're going to see more of, is just these large companies making massive investments into infrastructure for AI. Let's move on to IPO Radar news. We're in the thick of things. There's a lot of news reports coming out in the fall here, heading into October. and we're watching for any IPOs that could hit before the end of the year. And for a company to IPO in 2025, to get it in time, they need to file by about November 15th. That would give them about a month to get to about December 15th, and nobody wants to be investing or following IPOs or any finance news in the second half of December. So these companies have until about November 15th to file. I expect if we're going to see more companies file for an IPO in 2025, it's coming in October for a deal to happen before Thanksgiving, and we might get some early December deals. I am seeing leaks. I'm hearing things from people I talk to in the industry about a couple deals that are coming. You can go to my website and look up the upcoming IPOs page to see those companies who might be going public. Some of them that we thought were going public may be pushing off to 2026, and it's very easy to push off to 2026 at this point, so plenty of companies may do that as well. But just two stories I want to highlight a little deeper today. Beta Technologies, the first one. This is an electric aircraft startup specializing in vertical takeoff and landing. That's called an eVTOL. And conventional takeoff and landing, CTOL vehicles, founded in 2017. So this is a company that makes electric airplanes. And talk about cool, talk about the future. And I'm sharing my screen now with a couple examples of what these aircraft look like. So Beta Technologies operates in cargo, defense, and passenger transport. Eventually, that's what they want to do. Company has raised at least $1.3 billion in equity and debt, and the latest round was a Series C in October 2024, raised about $300 million at a $4 billion valuation. The news that came out this week is from The Air Current, a website called The Air Current, and it says that electric aircraft developer Beta Technologies is preparing to go public via an initial public offering, said multiple people with knowledge of the development. Now, this one's interesting because this Air Current is very specific to this type of industry, and we're not getting this leak from a Reuters or a Bloomberg or the Information or the Wall Street Journal, the outlets that we normally hear about this news. So I credit Strictly VC. It's an email list I'm subscribed to. Strictly VC has a long list of stuff in the VC world. The emails come out during the week. And this one was highlighted in there. And it's the only reason I saw this because it just wasn't widely reported. It says here that the Air Current understands that Beta expects to make a public filing with the U.S. Securities and Exchange Commission by the end of the year. A spokesman for Beta said in response to a request that it was not confirming any aspect of the reporting. So curious here that it says it's going to make public the filing by the end of the year. So that sort of implies that they want to just get the filing out there and then IPO in 2026. It could mean it's a confidential filing. It could mean they want to try to get the IPO done in 2025. But the wording is interesting here. It expects to make a public filing with the U.S. Securities and Exchange Commission. So Beta Technologies on my radar. Looks like it's moving toward an IPO. Could be soon. Could be this year. Could be next year. Hopefully we can get a confirming story from a larger publication that maybe knows how to word it a little bit better. In the meantime, Beta Technologies is moving up the chain on my upcoming IPO list because it could come here in 2025. We're not sure, but this is an exciting company. Any type of electric company, electric vehicle company, be it Tesla or Rivian or Kodiak Robotics is another one that is AI electric trucking, which actually is going to SPAC. I think this week or next week it's going to SPAC. But anytime there's electric vehicles, it seems like the public is very interested in it. Aptera Motors, I mentioned a few weeks ago, they're doing a direct listing IPO. But there's this demand, a public demand for consumers who really want to own these electric car vehicles, or they're just interested in the technology. And I'm sure that aviation specialists are very interested in this technology, this electric technology, and then the vertical liftoff type of stuff. So very cool company, very cool technology. Will it be a cool IPO? We'll have to wait and see what the S-1 filing looks like. Hopefully we see it by the end of the year. Last story of the day I want to talk about, and this one blew my mind when I saw the article out there. Article came from Bloomberg, and it says here the crypto giant Tether seeks funding at a $500 billion valuation. $500 billion valuation for Tether. Who is Tether? Tether is the leading cryptocurrency stablecoin provider. It's an El Salvador-based company. The company's called Tether Holdings, and I don't know much about the company other than it's El Salvador. And I've looked this one up. It's been on my peripheral radar because people are interested in Tether and investing not just in the cryptocurrency, which is a stable coin, so it's not like that's going to go up. But Tether is handling global transactions and crypto transactions. We saw Circle IPO to great fanfare back earlier the year because of their stablecoin. And Tether is a bigger stablecoin than Circle. So Tether, if this valuation is true and someone's actually willing to invest in this company at a $500 billion valuation, then it's the same size or larger than SpaceX, than OpenAI, than ByteDance, the TikTok owners. This is just a really extraordinary number. It says here, Tether Holdings SA is in talks with investors to raise between 15 and 20 billion in exchange for roughly 3% stake through a private placement. I'm willing to bet SoftBank is investing in this deal. They like to invest at those high valuations. The deal could value the company around 500 billion, putting it in the same league as OpenAI and Elon Musk's SpaceX. Tether's chief executive officer, Paolo Arduino, said the company is evaluating a raise from a group of high-profile investors to maximize the scale of the company's strategy across all existing and new business lines. Another person involved in the process cautioned that those are top-end targets and eventual numbers could be significantly lower. It almost seems like they just threw out this $500 billion number as a joke or just to see how people would react. And honestly, like, people haven't been that surprised about it. Crypto enthusiasts, they love this idea of a stable coin. We saw Circle's valuation soar upon its IPO, but it's nowhere near this valuation. Even though Tether is bigger, and Tether is a leader, but stable coins, this is something that other companies are going to create. Circle's doing it. Ripple has one. I think Gemini even has one. And some of these big banks are talking about creating their own stable coin. It's all going to be a matter of adoption. Who's going to adopt these technologies? And Tether is in the lead for stable coins. Cantor Fitzgerald is acting as the lead advisor. It says it's going to involve new equity rather than existing investors. It says they want to raise money to maximize the scale of the company's strategy across existing and new business lines. It says USDT token is tied to the US dollar with a market value of $172 billion. It's by far the largest. Circle is number 2. Its USDC stablecoin is worth about $74 billion. It says Tether has made a fortune by parking the reserves that back its token in cash-like assets, including treasuries, and earning interest. It booked a $4.9 billion in profit the second quarter, according to a blog post in July. Arduino recently claimed Tether has a 99% profit margin. So yeah, looking at the Tether website, it says Tether issues $20 billion in USDT year to date, becomes one of the largest US debt holders with $127 billion in treasuries and a net profit of $4.9 billion in Q2 2025. So I got to tell you, I've been behind the ball on this one. I wrote about Circle years ago, but I never wrote about Tether, and this has become a hair on fire situation. I need to start covering this company if it truly is now one of the biggest companies in the world, biggest private companies in the world. Really extraordinary number thrown out there at $500 billion, 99% profitable. I think you know that I'm not a crypto enthusiast. I've never been a crypto enthusiast. I've been certainly following what's going on in the crypto space and Bitcoin and XRP and Circle, their stablecoin. This one, Tether Holdings, just not a lot of information out there about previous funding rounds or ownership. This is something I need to dig into a little bit more, but that $500 billion valuation, true or not, that's rather eye-popping. I'd like to see some reporting confirm that, or we could see this deal close and get an actual valuation on Tether, because if it's anywhere near that $500 billion, that says a lot for the crypto industry, and it certainly could be one of the most profitable businesses out there, or one of the best businesses to own in the crypto space, and you're going to want to own that if it's the best company out there. The public markets are going to want to own it if it's the best crypto company out there, best stablecoin company out there. And those are the types of companies I want to cover. When you're looking for information about a company that you want to invest in, you come to Access IPOs, and hopefully I can give you the tools you need to determine if you can invest today or tomorrow or in an upcoming IPO or once a company is public. And so most of the articles I write kind of look at things from that perspective. Is this company public? Yes or no? Is it moving toward becoming public? And if it isn't public, is it investable? Sometimes these companies are liquid and have a lot of private share transactions happening in the secondary markets. Sometimes we can own them through a fund like the Fundrise Innovation Fund or the ARK Venture Fund. But most of the time we can't invest, and it's really a matter of waiting for the IPO to happen, which unfortunately has been taking a long time for a lot of these private companies. They want to stay private for longer. Retail is shouting from the rooftops, We want to invest in these companies. How can we get access to them before they hit their major growth trajectories? Tether, if it's worth $500 billion, it's already past its growth stage. Maybe it has room to run, but we missed it from that $1 billion level to the $500 billion level. And that's really where we want to invest as retail investors. And unfortunately, we haven't had that chance for a lot of the companies of our time. Think about OpenAI and Anthropic. They were $1 billion companies not all that long ago. Now they're a few hundred million. So that's what we're all about here, getting access to investment opportunities for retail investors, and the sooner the better. I know some of you in the audience were looking at Tether 10 years ago and thinking, how do I invest in that company? Not just the coin, but how do I get into that company because it's going to explode? And you were right because it has, but you couldn't invest back then, and you probably can't invest now. Retail doesn't get a lot of credit for identifying those trends, but if you look back to 2022 when ChatGPT came out, a lot of us knew this company was going to be huge, OpenAI, of course, and it is huge. It's the center of this whole AI ecosystem, but retail investors, for the most part, could not invest. That's what we're trying to change, not only through this podcast, through conversations we have, and through the public voices on the various social media channels. Retail wants access, but we want regulated access and legitimate access where retail investors are protected and not just going into investment opportunities, not knowing if your investment is going to be secure. Regulators need to move forward with some clarification. Technology is there to enable all of this, but we need regulatory support, we need laws passed, and we need protections in place so that our money and our investments are protected while they take advantage of this incredible growth that's happening in the private markets, and hopefully more so in the public markets as these companies go public and become publicly traded entities. That's all for the show. If you like what you're seeing here, please hit the subscribe button or the like button wherever you consume your podcast or your videos. Subscribe to my weekly newsletter. It comes out on Sundays. There's a link in the description. And you get a free download. It's called From Startup to Public Company, the IPO Process. It's a free download PDF. You can get it from my website. It'll be delivered in your email. I'm not going to spam you. Cancel anytime. No big deal. It's the best way to stay in touch. But if you really want to up your game and connect with a community of investors who are taking advantage of these IPO opportunities, and you want to share strategies or learn from other investors who are getting large allocations to these upcoming IPOs or these previous IPOs and these upcoming IPOs, then join the Access Club. That's our Patreon membership group. We're up to about 40 members right now who are paid members, and that means they're engaged. Their privacy is protected behind the paywall. We're not out on Twitter. It's all behind the paywall. And it's a great way to connect with people who are really passionate about this stuff as much as you and I are. Go to patreon.com/accessipos to sign up. It's only $5 at the baseline level. There's a 7-day free trial. You can cancel anytime. There's really no risk if you want to check it out. You can even go in there and spy and see what we're talking about during this upcoming month where there's these deals coming through. Thanks for watching. Thanks for listening. I'll be back next week with a brand new episode, so I'll see you then. This video is not a recommendation to buy or sell any startups mentioned. Pre-IPO and IPO investing involves significant risk. Conduct due diligence by reading the SEC S-1 filings before participating in IPOs. Do not invest in IPOs with money you cannot afford to lose. Thanks for watching.